This is not really a surprise overall. We've seen kind of regulators of various types pile on. Binance is by far the biggest target to go after in terms of the sheer scale. We're talking like an order of magnitude larger than FTX. And so, this is not that surprising. And this whole industry, because it all grew up in the span of a decade and in a largely kind of, jurisdictional arbitrage way, not a lot of regulation, you see a lot of things that are kind of immature relative to the current market structure you see in equities or elsewhere, where, for example, you have the same entity operating on an exchange and then trading on that exchange and then issuing its own securities on that exchange.
The United States Securities and Exchange Commission, SEC, announced on June 5 that Binance, the largest cryptocurrency exchange in the world, its US-based affiliate BM Trading Services, and their founder Changpeng Zhao had been charged with a number of violations of the securities law. This was done as part of an overall crackdown on the entire cryptocurrency industry. Gary Gensler, the chairman of the KCC, used his Twitter account the same day to make some of the accusations against Zhao and Binance public. Through 13 charges, we allege that Zhao and Binance entities engaged in an extensive web of deception, conflicts of interest, lack of disclosure, and calculated evasion of law, states the tweet from the attorney. The largest American Bitcoin exchange, Coinbase, was the target of the U.S. regulators' Tuesday huge crypto crackdown. For operating as an unregistered broker exchange and clearing agency in violation of U.S. securities laws, the SEC is suing Coinbase. In a lawsuit filed against the exchange, the SEC states, Coinbase has operated as an unregistered broker, unlicensed exchange, and unregistered clearing agency since at least 2019 through the Coinbase platform. By combining these three tasks into a single platform, failing to register with the SEC for any of the three tasks, and failing to meet the requirements for any applicable registration exemptions, Coinbase has been flouting the regulatory frameworks and avoiding the disclosure requirements put in place by Congress and the SEC to safeguard investors and the national securities markets for a year. As part of its legal action against Binance, the SEC filed an emergency motion on Tuesday, asking for a temporary restraining order to freeze the assets in the control of BM Management US Holdings and BAM Trading Services, the companies that run Binance US, the American division of Binance.com. The restraining order is necessary, according to the SEC, to protect customer cash. Since the news of the litigation became public, a number of well-known players in the cryptocurrency sector have responded to what some see as the beginning of Changpeng 2.0. On Tuesday, Preston Pysh, co-founder of the Investors Podcast Network, and well-known financial analyst Lyn Alden joined an emergency broadcast on the Swan Bitcoin channel to discuss the situation and what it means for Bitcoin and the broader cryptocurrency industry. Please spend a moment liking this video, subscribing to the channel, and turning on post alerts before we listen to the insightful discussion.
You have the same entity operating on an exchange and then trading on that exchange and then issuing its own securities on that exchange, and all these kind of things that are like stacked up that creates an environment that is stacked against the small user using that exchange. And so I think that that's slowly being cracked open by all these different regulators. I also think we're seeing some degree of global bifurcation, where there's some areas that seem willing to become hubs for this type of thing because of the the revenue they get or whatever the case may be, and other jurisdictions like the United States are taking among the most hardline approach on it. So we're seeing kind of this like bifurcation spread out. Another thing I've been trying to monitor is the overall impact of Bitcoin's price, because as Rafa mentioned, Bitcoin itself is not really affected by this, other than the fact that you have to ask who is selling, who might be forced to sell, who's getting liquidated. And of course, one of the risks is that Binance could sell some of its Bitcoin. And if you go back to the when Luna blew up, let's say in May 2022, if you look at Glassnode data, so they do their best to try to figure out how much Bitcoin different exchanges actually have. They use a bunch of different on-chain characteristics. If you talk to Checkmate, who works there, there's some that they're more sure about than others. Like some have kind of clearer heuristics than others, but they do their best to kind of track how much Bitcoin each exchange has. And if you look at FTX's balance, after the Luna fiasco, FTX's Bitcoin balance started to drop significantly. That was kind of a sign, especially in hindsight. People weren't really looking at it too much at the time, at least most people, but that they were actually, we found out later that they didn't actually have any Bitcoin. So there are a lot of customers thought they had Bitcoin through FTX, and they didn't. And it's in large part because FTX was selling the Bitcoin that was actually customer Bitcoin. So far, according to Glassnode data, we don't really see that with Binance. But the risk there is that they, according to Glassnode, they have like 700,000 Bitcoin. And so I think that some of the selling pressure we see in Bitcoin is that some investors have concerns that if Binance does have some sort of solvency problem, that they might sell some of their stack, or might sell some of their customer stack, and kind of damage the price in that way. So whenever you have these big honeypots that can be cracked open in various ways, that does present kind of this like near-term price risk or volatility risk.
Where does the industry go from here? What do you see happening in the next 5 years or so?
So I think we see so far different things in different jurisdictions. In a number of countries, we've seen the rise of Bitcoin-only platforms, right? So instead of kind of have these platforms that are kind of presented as this more casino environment, we've had these platforms like Swan, but others as well, arise and say, look, if you just want to buy Bitcoin, if you don't want to subsidize and deal with altcoins, if you don't want to, if you recommend someone go to an exchange, you don't want to have to tell them, okay, buy this Bitcoin, don't buy one of the fake Bitcoins, all that kind of thing, all the leverage and rehypothecation that happens. I think this strengthens the Bitcoin only space. I think it kind of validates the Bitcoin only platform model for entities that just want to have a more serious savings focused approach rather than kind of a casino type of market. I think where we need to see more work on that is in developing countries. One of the unfortunate things is that basically in dozens and dozens of jurisdictions around the world, Binance is like their go-to for when they want to exit their system and get on this. And Binance has a really strong ground game because they're super profitable from all their casino type activities. So they have this ground game. They go out. When you look at all these analysis, like who owns quote unquote cryptocurrency, whether it's Bitcoin, stablecoins, other cryptos, it's often just people owning it on Binance. It's this gigantic global honeypot, which is a big risk for a lot of them. And I think we need better ground games among Bitcoin companies in those space. Like they're not as capital rich as Binance because trading and the casino activities are a very profitable short-term thing. So they've had this big boost, whereas Bitcoin only companies, it's a longer grind. Kind of a lower time preference thing. And I just think we need more and more access points so that if someone in Egypt, if someone in Indonesia, if someone in country XYZ says, where can I buy Bitcoin? I think we need really clear answers that are not casinos. Like the fraudonomics of the token empowered VC space have been very powerful. And this is a more utilitarian type of message, which is less kind of exciting and sexy for a lot of those kind of big pools of capital. But it's like for ones that are serious and say, hey, we want to build out this like 5, 7, 10-year thing. I think we're seeing that, and there is a decent amount of capital in the Bitcoin only ecosystem, even though it's a small fraction of the broader space. It's just that those giant casinos are, that's where most of the capital's gone. I consider it mostly malinvestment, and so I do hope to see more of these platforms. The peer-to-peer space, I think, could use a lot more love, kind of peer-to-peer Bitcoin platforms, as well as just kind of, Bitcoin only centralized platforms to help people on ramp and provide Bitcoin services to people to kind of, give them access points into the space, provide education, help them self-custody over time. I do hope to see more of that. And there was a report by Trimble Venture Partners a couple months ago where, I think it's actually a month ago, they covered basically, they looked at how much VC capital is in the space. And if you look at seed and Series A and pre-seed, I believe, Bitcoin companies were like 2% of the VC capital in the broad space, and the other 98% was multi-coin stuff, which also includes, a lot of those platforms have Bitcoin too, but it's only 2% that Bitcoin only space. And so I think that the base has a lot to grow from there. Let's put it like that. I don't think we're going to 100% overnight, but I think we can get off too.
So is this the beginning of the end for crypto casinos in the U.S., Preston? What's your thoughts on that?
I think if you're hanging around playing that model in the U.S., you're totally nuts. So I guess my answer for that would be yes. From the beginning, everybody that's on this call right now has said that all these altcoins, shitcoins, whatever you want to call them, they're not equity. They're an affinity scam for people to claw away Bitcoin from people that don't understand that they're being scammed. And it's the way the scam works is they're saying it's better technology, that it's this or it's that. But at the end of the day, what it is it's a total scam. And you're finally having regulators catch up with a lot of those activities, and they're going after the implementers of the enablers of these affinity scams of many of these tokens. So is this something that should have been expected? Yes. Is this something that took a lot longer to play out than what I would have thought? Yes. You know, I'm all about free and open markets, but I'm also all about, like, if you're gambling, there's a big difference between somebody sports gambling or showing up to a casino and knowing that their odds are 47% to play roulette versus somebody who thinks they're investing in technology and they're actually being scammed. There's a big difference between those two things. And the difference is in the knowledge that's up front and the way that it's being presented to people. And, you know, I think this is long overdue that you're actually seeing something play out right now.
There still be some jurisdictions that are happy to have them, and then they can operate and kind of put their tendrils out from there. But the ease of marketing to Americans, marketing, you know, perhaps to Europeans over time, these things just I think the windows are going to close on them, and that'll kind of, you know, turn some of the capital fire hoses into garden hoses, and put some of that out. And I think that does give Bitcoin companies an opportunity to say, here's why we're different, here's what we're doing. It's a very different environment, and hopefully some of that capital can shift over to companies that are trying to build a longer term and more ethical foundation, instead of, you know, trying to get more and more people to trade and dump, you know, known things on retail. I think it's more about companies that educate, companies that build technology, you know, other layers on top of Bitcoin, wallets that use those layers, innovative ways of using Bitcoin. All these on-ramps, educators, technology developers. I think that's where the long-term story is. And I think that the more these kind of casinos are marginalized, the more we'll see capital flow towards, I think, some of these more foundational things that need to be built and need to continue, you know, being rolled out.
What do you think about the accusations made by the SEC against Zhao and Binance, as well as the various points of view? Please post your thoughts and views in the comments area. Make sure to like this video, subscribe to the channel, and enable post alerts for more videos. Thank you for watching.